Hey everyone, welcome back to the channel. I'm Vivid Vortex, and today we're diving into the wild world of cryptocurrencies. Now, as many of you know, Bitcoin has been on an absolute tear recently, surging to new highs and capturing headlines everywhere. It's exciting, right? You see those green candles, you hear the buzz, and it's tempting to think every crypto is going to the moon. But here's the thing, and this is really important, just because Bitcoin is doing well doesn't mean every single altcoin is a golden ticket. In fact, some can be downright risky, especially in a market that's still incredibly volatile. So, while the Bitcoin rocket ship is fueling up, it's crucial we keep our feet on the ground and make smart, informed decisions. Not all cryptos are created equal, and some are carrying baggage from the past or facing challenges that make them less than ideal bets right now. We need to be selective, we need to be cautious, and we absolutely need to do our homework. It's easy to get caught up in the hype, especially when you see those massive percentage gains, but chasing pumps without understanding the fundamentals is a recipe for disaster. That's why today, we're going to cut through some of that noise. I've been looking at the market, analyzing the trends, and I've identified 3 specific cryptocurrencies that, in my opinion, you might want to steer clear of, at least for the time being, even with Bitcoin's current momentum. We're going to break down why these particular coins are on my caution list. We'll look at their performance, their fundamentals, and the specific risks associated with each one, so you can make a more informed decision for your own portfolio. Let's get into it. Alright, first up on our list is a name that pretty much everyone, even people outside of crypto, has heard of: Dogecoin. Doge. The original meme coin that took the world by storm, fueled by internet culture, celebrity endorsements, primarily Elon Musk, of course, and a whole lot of speculative frenzy back in 2021. Many people made a fortune, many more jumped in hoping to do the same. But here's the reality check. That was 2021. The landscape has changed dramatically since then, and what worked in a full-blown meme coin mania might not be a sound strategy today. Now, I know some of you might be thinking, but Vivid, Dogecoin just had a 24% rally. And yes, it did see a recent pump. These short-term spikes happen, especially with coins that have a large, dedicated, and often vocal community. However, we need to look at the bigger picture, not just a few green days. Despite that recent rally, Dogecoin is still down significantly, around 33% for the year, if you zoom out. More importantly, it's trading at about 21 cents, which is a universe away from its all-time high of nearly 74 cents. That's a massive drop, and it signifies a major loss of momentum and investor confidence from its peak. The core issue with Dogecoin, and it's always been its Achilles heel, is its lack of fundamental value or unique utility. It was created as a joke, a lighthearted poke at Bitcoin. While it has a fast and cheap network for transactions, it doesn't offer much beyond that, especially when compared to newer projects with sophisticated technology and real-world use cases. Its value has historically been driven almost entirely by hype and sentiment, which is an incredibly fickle foundation for any long-term investment. Relying on social media trends or the whims of a billionaire is not a sustainable investment strategy, folks. The Elon Musk factor, which was a huge catalyst for Dogecoin's meteoric rise, has also considerably faded. While he still occasionally mentions Doge, the market impact of his tweets or comments isn't what it used to be. The market has, to some extent, become desensitized, or perhaps investors are realizing that a tweet doesn't fundamentally change the underlying technology or adoption of a coin. Without that constant high-profile pumping, Dogecoin struggles to maintain upward momentum based on its own merits. Because frankly, those merits are pretty thin. So, when you put it all together, its speculative nature, its reliance on fleeting hype, the diminished impact of celebrity endorsements, and the fact that it's still massively down from its peak, despite a broader market recovery, Dogecoin remains a very risky proposition. The chances of it repeating its 2021 performance are, in my honest opinion, extremely slim. There are simply too many other projects with stronger fundamentals and clearer growth paths in the crypto space right now. Chasing past glory with Dogecoin feels more like gambling than investing. Next on our list is Cardano, ticker symbol ADA. Now, Cardano is a different beast altogether compared to Dogecoin. This isn't a meme coin, it's a serious project with a highly respected founder, Charles Hoskinson, who was also one of the co-founders of Ethereum. For a long time, Cardano was touted as a potential Ethereum killer, a next-generation blockchain platform that promised more scalability, sustainability, and interoperability. It had, and still has, a very strong academic research-driven approach to its development, which many people admired. The hype around Cardano was immense, particularly leading up to its smart contract capabilities and during the 2021 bull run. It reached an impressive all-time high of $3.10. Investors were excited about its potential to host a new ecosystem of decentralized applications, dApps, DeFi protocols, and NFTs, all on a supposedly more efficient and secure platform than Ethereum. The community is passionate, the development updates are regular, but the market performance and ecosystem growth have frankly been underwhelming for a while now. Currently, Cardano is trading for less than $1. Think about that. From a high of $3.10 down to under $1. That's a significant drop, and it reflects a growing concern that Cardano, despite its sophisticated technology and meticulous development process, is struggling to gain significant traction and adoption. The Ethereum killer narrative has largely fizzled out as Ethereum itself continues to evolve with its own upgrades like the merge, and as other Layer 1 and Layer 2 solutions have captured more market share and developer interest. What's particularly concerning is when the founder himself acknowledges the struggles. Charles Hoskinson, in his typically candid style, has admitted that Cardano is, in his words, stuck in certain areas, particularly when it comes to ecosystem growth, and attracting the sheer volume of developers and projects that competitors like Ethereum, Solana, or even newer chains are seeing. While transparency is commendable, such statements from the project's leader don't exactly instill a wave of confidence in the short to medium term for investors looking for growth. So, while the long-term vision for Cardano might still be intact for its core believers, and the technology might be sound, the current market reality is that it's lagging. The development has been criticized for being too slow, too cautious, and the ecosystem of dApps, while growing, hasn't exploded in the way many had hoped. For an investor looking at the current crypto landscape where Bitcoin is surging and other projects are showing vibrant growth, Cardano feels like it's stuck in a lower gear, making it a less attractive option compared to assets with clearer, more immediate catalysts for upward movement. Last but not least, let's talk about Litecoin or LTC. Litecoin is one of the OGs of the crypto world, often referred to as the silver to Bitcoin's gold. Created by Charlie Lee, a former Google engineer, back in 2011, it was designed to be a faster, lighter version of Bitcoin, with quicker transaction times and a different hashing algorithm. For many years, Litecoin held a strong position in the top 10 cryptocurrencies by market cap, and was seen as a reliable, albeit less exciting counterpart to Bitcoin. However, the crypto space has evolved at lightning speed, and what was innovative in 2011 isn't necessarily cutting edge today. Litecoin, much like Cardano in some respects, is still languishing well below its all-time high from the 2021 bull market. While Bitcoin is pushing new boundaries, Litecoin seems to be struggling to recapture its former glory or generate significant new investor excitement. Its price action has been relatively stagnant compared to many other large-cap cryptos, which is a red flag in a market where capital tends to flow towards assets with strong narratives and growth potential. One of the big narratives recently for Bitcoin has been the approval of spot Bitcoin ETFs, which has undeniably brought a new wave of institutional interest and capital into BTC. Many were hoping that Litecoin, given its similarities to Bitcoin and its long track record, would be next in line for its own spot ETF. This anticipation could have been a significant catalyst for LTC. However, the latest indications and market sentiment suggest that a spot Litecoin ETF, if it happens at all, might not get the green light until much later, possibly the end of 2025. That's a long time to wait in the fast-moving crypto world. An entire market cycle could play out before then. Delaying a potential major catalyst like an ETF puts Litecoin at a disadvantage. Investors are looking for opportunities now, especially while Bitcoin is showing strength. If a key bullish event is pushed out by nearly 2 years, that capital is likely to flow elsewhere, to projects with more immediate prospects or stronger ongoing development and adoption metrics. Waiting for an ETF that far out feels like a gamble on something that's far from certain. So while Litecoin still functions as a peer-to-peer electronic cash system and has a dedicated user base, its relevance and growth potential in the current market are questionable. It faces stiff competition from newer, more technologically advanced payment coins and platforms. Without a strong, near-term catalyst like an imminent ETF approval, and with its development appearing less dynamic than many of its competitors, Litecoin feels like another risky bet right now. It's a legacy coin that might be getting left behind as the crypto industry continues its rapid innovation. So there you have it, folks. While Bitcoin is absolutely on the rise and capturing a lot of positive attention, these three cryptocurrencies, Dogecoin, Cardano, and Litecoin, might not be the best investments right now, in my humble opinion. Dogecoin's reliance on hype, Cardano's struggle for traction despite its tech, and Litecoin's long wait for a potential ETF and somewhat stagnant growth narrative are all significant factors to consider. Remember, the goal here isn't to bash these projects but to highlight potential risks and encourage you to think critically before investing your hard-earned money. It's crucial now more than ever to do your own thorough research. Don't just take my word for it, or anyone else's for that matter. Dig into the white papers, look at the development activity, analyze the community sentiment, understand the tokenomics, and most importantly, assess your own risk tolerance. The crypto market is exciting, but it's also incredibly volatile, and not every coin is going to be a winner. Invest wisely, diversify appropriately, and never invest more than you can afford to lose. That's the golden rule. If you found this breakdown helpful, or if you have your own thoughts on these cryptos or others to watch out for, please drop a comment down below. I love hearing from you guys and starting a conversation. And of course, if you want more content like this, breaking down the good, the bad, and the ugly in the world of finance and crypto, don't forget to smash that like button, subscribe to the Vivid Vortex channel, and definitely hit that little bell icon so you get notified every time I post a new video. Thanks for watching, stay safe out there, and I'll see you in the next one.